Welcome to another Disruptive Discourse video. Well, in the last video, I introduced a new format and the responses I got were positive, so I have decided to carry on with the same format. And thanks to all of those who gave their responses. So in this video, I'm going to rate all the newly added stocks by their growth potential, with the stocks having the highest growth potential being rated number 1, and the stock with the least growth prospect being rated the lowest. There are 7 of them in this video, covering the period of December 21 to 25 and December 28 to January the 1st. In alphabetical order, they are Adobe, Amazon, Beam Therapeutics, Magna International, Nvidia, TCS Group Holdings, and Veeva Systems. As for the stocks that I've previously analysed and which Ark Invest purchased during those 2 weeks, those are on screen right now. Also, to make it more easy and convenient to navigate this video, and for those who just wish to jump to their favourite stocks, I've added timestamps to this video, so feel free to use those. They are in the description box below. Okay, on to our stock ratings. At number 7 is Magna International, ticker symbol NYSE-MGA. Ark Invest purchased $3.4 million worth of a stock on December the 24th. The CEO is Don Walker, and he is just literally retired, and his role has now been taken over by Swami Kotagiri. Magna International is a company that offers manufacturing services to other manufacturers in the automobile industry. They cover everything from car body parts to drivetrains and hardware for autonomous vehicles such as LiDAR and radar systems. In fact, they offer a full turnkey solution to build cars for established and new car companies. They have partnered with Jaguar to help build the I-Pace. They are currently partnering with Fisker and will develop their first model called the Ocean. They are also rumored to have been approached by Apple to help build the Apple car. But that is just a rumor, and Apple has not confirmed anything yet, as we already know. Magna International definitely has real pedigree in the car manufacturing sector, and I suspect they wouldn't have a shortage of B2B clientele for the foreseeable future. As for revenue, the company has a moderate market cap of $21.8 billion, but surprisingly, it generates a revenue of over $30 billion, which means that the market is currently valuing this company at less than the revenue it generates in a single year. And that is certainly very rare to come by, and would suggest that the company is currently undervalued, not least because that would give it a price to sales multiple of under 1, which makes the company definitely cheap from a valuation perspective. As for revenue growth, over the past 3 years, its revenue has been relatively flat, growing at a rate of 2.65% compound annual growth between 2016 and 2019, and really that is the metric that matters the most, and that's why this is at number 7 on this list. At number 6 is Adobe Inc., ticker symbol NASDAQ ADBE. Ark Invest purchased $12.9 million of a stock on December the 21st. CEO is Shantanu Narayan. Adobe is a software company that specializes in software tools aimed at the design and creative industry. Put simply, Adobe has more tools than there are elements in the periodic table, or at least it feels that way, and yes, I did look it up. 118 elements in the periodic table and well over 50 apps in the Adobe Digital Media segment, which accounts for 72% of the company's total revenue. The most popular ones of those 50 apps are Photoshop, Illustrator, InDesign, Acrobat, and Animate, which is the reincarnation of the officially dead and retired Adobe Flash. But of course, Adobe also provides solutions for the advertising and marketing sector through its Adobe Digital Experiences segment. Adobe has been around since the early 1980s, and in fairness to the company, they've continued to innovate to stay relevant. And let's face it, we all use at least one or more of their products in our daily lives, so they're not doing too badly. Although I still question their management direction, they recently announced the continuation of their stock buyback program, which is set at $15 billion over the next 3 years until financial year 2024. Forgive me, but I just think that companies who buy their own shares back simply don't think that they've got anything else they could offer in terms of investment that could yield a decent enough return on investment for investors. Perhaps they could take a leaf out of MicroStrategy's playbook and buy Bitcoin instead. Anyway, as for their revenue, it's grown from $7.3 billion in 2017 to $12.87 billion in 2020, giving it a compound annual growth of 20.81%. Adobe has also announced that its total addressable market has expanded to approximately $147 billion by 2023, so there's a good chance that they could maintain the current growth rate, and if they do, that is definitely a positive thing. But for me, there are much better companies out there to help grow your wealth, and that's why they're no higher than number 6 for me on this list. At number 5 is Veeva Systems, ticker symbol NYSEVEEV. Ark Invest purchased $77.9 million of a stock on December 22nd to 24th. The CEO is Peter Gassner. Veeva Systems is a cloud software company that is targeted specifically at the life sciences sector. Majority of its revenue comes from subscriptions to its commercial cloud and Vault platforms. The rest of the revenue is from services. So digging a bit deeper into the subscription model, commercial cloud was initially the larger part of its revenue, but this has over time been equaled out by the revenue generated from its Vault platform. So both platforms have generated roughly the same amount of revenue from subscriptions, with Vault edging it at present with 51% of the revenue generated year to date. The commercial cloud part of their business is made up of 2 segments: a customer relations management platform, which is similar to the likes of Salesforce for the health sector, whilst the commercial contents platform is for the creation, approval, and distribution of commercial content. As for the Vault part of their business, this leverages Amazon's AWS cloud to manage data and workflows on a single platform for a significant number of healthcare companies. So it is gaining a lot of traction in the healthcare sector as being the one-stop shop for cloud-based services that the healthcare sector relies on. As for the company's revenue, it has grown its revenue from $550.54 million in 2017 to $1.1 billion in 2020, giving it a compound annual growth rate of 25.95%, and it is likely to continue to grow at this rate given that it is really penetrating the healthcare sector. And for me, that is why this company ranks ahead of Adobe and claims the number 5 spot on this week's list. Coming in at number 4 is Amazon, ticker symbol NASDAQ AMZN. Ark Invest purchased $8.5 million of a stock on December the 21st. The CEO is, of course, Jeff Bezos. Amazon needs no introduction. From the humble beginnings of an online bookstore, Amazon has grown to be quite the intimidating behemoth, spotting an eye-popping $1.5 trillion in market cap. It is the largest e-commerce platform in the world, generating a mind-boggling $280 billion in revenue in 2019 alone. This not-so-humble bookseller now sells practically everything, and I'm not talking about just goods. Amazon's AWS is the largest cloud services company in the world, bigger than Google Cloud and Microsoft Azure. As of October 2020, Amazon's AWS owned 32% of the market and generated more revenue than the next 3 largest combined. Azure is at 19% of the market and Google Cloud is at 7%, with Alibaba Cloud just behind at 6% and the rest of the cloud services companies being 37%. Now, as if that wasn't enough for world domination, Amazon has started to make significant inroads into the payments and fintech sector with Amazon Pay. So the familiar one-click pay frictionless experience that we have all come to love and enjoy on Amazon is now being rolled out literally to businesses operating outside of Amazon. These businesses can now integrate and enable Amazon Pay on their websites, and this allows pretty much all Amazon account holders who visit those websites to skip account setup and simply check out using the existing Amazon credentials, which includes pre-populated payment methods and address books, with no need for them to create a new account or fill out any additional forms, and shoppers don't have to leave the merchant site to complete the purchase. So all in all, it's quite an attractive option for online retailers selling their products outside of the Amazon marketplace. For me, this is one of the reasons that Amazon is in the Ark FinTech ETF. Amazon dominates because it's always innovating and seeking new areas to conquer, and it does it successfully most of the time. Now, turning to Amazon's revenue growth. In 2016, Amazon generated $135.99 billion, and in 2019 this grew to $280.52 billion, resulting in a compound annual growth of 27.3%. It's incredible for such large sums. Now, the instinct would be to say, well, surely it couldn't replicate that next year. And the reality is, Amazon has continuously surprised us, and this surprise has been happening for years, and I can't see this not continuing, and that is why Amazon makes it to number 4 on my list. At number 3 is Nvidia, ticker symbol NASDAQ NVDA. Ark Invest purchased $15.9 million of a stock on December the 21st. The CEO is Jensen Huang. Nvidia is a company that produces graphics processing units, otherwise known as GPUs. Unlike CPUs, which are called central processing units, GPUs are more powerful specialized computer brains, which were initially used for gaming and have since evolved into more complex specialized applications, such as Bitcoin mining and even AI training. But the core use remains in the gaming industry, and Nvidia was the company that pioneered the GPU technology. Now, Nvidia has grown from strength to strength and has been busy expanding its reach in the world of computing power. It recently acquired ARM Limited from SoftBank. ARM's CPU designs and processes are used in almost all mobile devices, such as mobile phones and tablets. Nvidia is looking to use its merger with ARM to develop the next generation AI accelerators to rival the tech giants such as Facebook, Amazon, and Google, who are all designing their own AI ASICs, which are also called application-specific integrated circuits. So only time will tell how this AI race will pan out, or indeed how Nvidia will fit into this industry. But Nvidia's plan is certainly geared towards building the next big thing with AI accelerators, and you can be sure that it will definitely be successful in this field. And for me, looking at the bigger picture, we really are at the cusp of an explosion in technology as far as it relates to computing power, and that will no doubt be improved as time goes by, especially with the advent of AI, which may well be the next thing that builds our future computers. And when you have companies like Nvidia in amongst them, there is no doubt there will be more growth to come, and potentially exponential growth. And that is why this is really a dark horse for me. As for its revenue growth, in 2017 its revenue was $6.9 billion, and by 2019 that grew to $11.72 billion, and it fell back down to about $10.92 billion in 2020. But its last 4 quarters, which makes up the 2021 revenue, adds up to about $14.78 billion. So over that 4-year period, it has a compound annual growth of 20.98%. I still believe there's still a lot of growth opportunities for Nvidia for the reasons I've explained earlier, but the main caution is, of course, that the rise of the mega tech giants could also be a real threat for the company. But nonetheless, I have real hopes for the company, and I think given that they're in the AI space, there is no doubt that there will be growth opportunities for them, far greater than what they're currently growing at. Taking the number 2 spot is TCS Group Holdings, ticker symbol LSETCS. Ark Invest purchased $0.9 million worth of a stock on December 23 to 24. The CEO is Oliver Hughes. TCS Holdings Limited is a holdings company which has as one of its subsidiaries TCS Bank, which stands for Tinkoff Credit Systems Bank. TCS Bank is a provider of retail financial services, and it operates 100% online and therefore has no physical branches. The company operates primarily in the Russian Federation. Its principal business activities includes consumer lending, transactional and payment services, and deposit taking. It also offers non-financial services such as insurance and pension services. It is the second largest credit card provider in Russia, and this is its largest category, followed by short-term retail loans, which it is also the second largest in that market. It is also gaining ground in other areas as well. Tinkoff is a very interesting company because it also offers a news-based content platform where the news is driven by its own algorithm based on users' preferences, similar to apps like Snapchat or Instagram. Tinkoff also has an e-commerce platform for its customers to buy regular everyday products like electronics and even mobile phones, and they offer discounts to their customers for using their app. They are also constantly expanding the services that customers can access through the app, such as booking restaurants to buying flight tickets, ordering flowers and football tickets, and the list keeps growing. So this creates more stickiness for its customers. They have definitely earned the title of being a super app within Russia, and this is definitely reflected in their user count. They currently have 6.5 million monthly active users and 2 million daily active users. Now, looking at the company's revenue, it grew from $1.13 million in 2018 to $1.64 million in 2019, giving a compound annual growth rate of 45.13%, and they are projecting a similar growth rate for 2020. So that is definitely solid growth. I'm a big fan of monopolies from an investor perspective, and what better place to have a monopoly than in a country of oligarchs? So this one definitely has my thumbs up and deserves its position at number 2 for this episode. The stock that takes the number 1 crown for this episode is Beam Therapeutics, ticker symbol NASDAQ BEAM. Ark Invest purchased $20.6 million of the stock on December 24. The CEO is John Evans. Beam Therapeutics is an exciting biotech company that IPO'd in February of 2020. The company's pipeline of therapeutics is exciting because it is leveraging the same CRISPR technology being used by companies like CRISPR Therapeutics, Editas, and Intellia. A short explanation is necessary here. The CRISPR technology works by using a DNA cutting protein called Cas9, which pairs with an RNA molecule called the guide RNA. The guide RNA represents the sequence of the targeted gene that needs to be edited. The Cas9 system will search the DNA until it finds a matching sequence. Once a match is found, the guide RNA binds to the target and unwinds the matching part of the double helix, and then Cas9 cuts the DNA, causing a double-stranded break. This has proven to be extremely groundbreaking, and the founders have received Nobel Prizes for this discovery, but nevertheless, its application in more complex genetic diseases may be limited. This is where base editing comes in and excels. Rather than editing or cutting a whole gene structure, causing a double-stranded break, like the 3 companies mentioned above, Beam is developing precision genetic medicines through the use of base editing. This means that it edits at the base pair level. In other words, it only edits one of the double helix strands of a DNA pair. DNA is made up of the letters A, T, G, and C. Each letter is a base, and when they pair up together, they form a base pair, which makes up the DNA. These pairings are essential to DNA functioning properly, and the correct base pairs are A to T and G to C. Mutations in DNA occur when the wrong bases pair up. For example, when T binds to G. The solution that Beam has come up with allows it to edit at the base level by removing the rogue base and replacing it with the correct base. They do this by deactivating the Cas9's cutting ability and fuse a new enzyme called deaminase. Cas9 then transports the deaminase to the target location, where the deaminase alters the faulty single DNA base by replacing, for example, a C base to a T base. This is a much cleaner way to correct an error in the gene sequence than to cause a double-stranded break. Beam Therapeutics have also successfully developed more sophisticated base editing enzymes that can carry out complex multiple base edits such as gene silencing, gene activation, and multiplex editing. This latter base editing process is really exciting because it can edit multiple sites simultaneously, which is something that has never been done before until now. And this was put to the test in a recent study by Beam Therapeutics, in which they successfully carried out 4 separate and completely unrelated edits using the same CRISPR delivery vector system simultaneously, and the results were quite impressive. The results showed that there was a more than 90% success rate across all 4 bases edited simultaneously with its proprietary base 201 solution used for leukemia CAR-T treatments. The result that Beam has achieved in this area really cannot be overstated. So looking at the company's future growth potential, it currently does not generate any revenue, and it is important to note that this company is still at the very early stages of its pipeline development. None of its therapies have undergone human trials, so I think it's really fair to say that there's always a risk of failure, and that is because there are so many regulatory hoops that the company would have to jump through in order to get all of its drugs and its pipelines fully approved, and those carry risks, especially if there is any huge slip up along the way. But at the same time, if they get through each of those stages, each time they get through a new stage, that would most likely have a significant impact, positive impact, on the share price. To put it simply, if the company is successful in human trials, you can be sure to see huge growth for this company. I would not like to put a figure on how much it can grow by, but this could transform the company into one of the world's leading biotechs. Right now, it has a market cap of $6 billion, and when you look at companies like Vertex, which have a market cap of almost $60 billion, if Beam succeeds, then it is not unreasonable to expect it to attain a similar level of valuation like Vertex, which is in effect a 10x from here. But as I said, this is a high-risk investment because its technology has not yet been tested in human trials. But Ark clearly believes in the company, and so do I. That is why I have made this one of my largest positions. But please do your own due diligence. Well, thanks as always for tuning into the channel, and if you're new, don't forget to subscribe. You can also follow me on Twitter. I'm quite active on there, and I tend to follow Ark Invest and what they're doing, and I also give my reaction much more quicker on there when it comes to any breaking news that's of importance, so do keep an eye out for that. But anyways, thanks again, and I'll see you in the next video.